Okay, guys, this is now the second part of part 2 stock market crash. Apparently, some people new in the chat are saying that there is a Lady Gaga concert that is absolutely insanely crashing the YouTube servers. So let's give it another try. And so we stopped somewhere at okay, where we stopped. Now, Lady Gaga brought me totally out of concept, which is not nice. But however, we just talked that the markets are currently rallying, and if this market is really trustable for a long-term rally. And we looked into some charts here. I will just have a look, another look on that. So we had this bear market rallies in a couple of times over the last financial crisis, which is a good figure to look into, but obviously not a guidance, right? However, you see that over the last couple of months and couple of years, actually, the stock market went up and down, mainly down, and then you had the spikes where you had a couple of rallies during that time. So, usually this is something that is happening a lot. This is totally normal for the market to give themselves a bit of traction and a bit of releasement. There's always against movement, and so I love to see this because this gives us some great opportunity to trade. If you're following here, if not, make sure to smash that like button and also smash that subscribe button. And let's have a look what and who is here online in the chat. So let's have a look. And 17 other people are in. So okay, great. So let me know, guys, a couple of questions that I need to ask you before you are allowed to watch this live stream. Make sure to let me know where are you watching from. What are your questions? Let me know in the chat so we can discuss after a couple of information that I'm giving you. And also let me know if you smashed that like button for the YouTube algorithm. So first of all, as you have seen, this rallies are totally normal, and I believe, or I'm in the area of people, and also there's other YouTubers out there, experts that are thinking the same, that this is just the beginning of and further downturn of the whole situation. And there's a couple of things that are showing us that this can happen. So let's have a look into the volatility, because one of those things that are very much coming up in the crises is the volatility. So we see in this chart that what happened with the volatility is the volatility actually spiked when the market reached an bottom or an end, or a kind of plateau where the stock market go further. And we have seen a very, very high VIX in the last couple of weeks, especially in the downturn of the market. But we believe, or some people believing, that the VIX can go even higher, and we should see that those levels that we are currently on are not sufficiently, from the volatility standpoint, that we will have a bottom. And this is, guys, this is just something very technical and very, very fundamental. As you know, I'm a growth value investor, and I believe in news and really things that are not known by Wall Street, information that you might research and have an advantage of the Wall Street, and then also to find those companies who really innovate their field. Like, we did with Tesla in the summer. We saw that this company was really, really important important, and then could react on this trend and overall situation, and very successfully could make a couple of percentage there. So let's have another look. It seems that this stream is now stable, so if you're watching this or watching this tomorrow, then make sure to watch the first part that I just recorded. And it seems due to the Lady Gaga concert that is online right now, our YouTube servers is not so stable. However, if you are just switched on, I welcome you as well to the most popular live Saturday night show for the stock market here, and I'm your host, the Wolf of Dubai. I'm live streaming at 11 p.m. 20 from the most vibrant city in the Middle East, and therefore I'm super happy that you are here. As I said, let me know where you are watching from, and also what are your questions, so we can get to those in a couple of days. In a couple of moments, in a couple of days. Just let me know your comments, and by end of next week I will get back to you. All right, so let me have a look. Where are you guys from? So Miami is there, Illinois, Denmark, Netherlands, Finland is there as well, California, Canada, and Poland. So Uruguay is also there. So and JJ is saying the only thing that crashed was the stream, but very, very interesting, and you are totally right. But as you know, you get to my foundation on my opinion. However, I'm not the regular crash prophet that say, guys, go and buy toilet paper because this will be the most crash out there. Never ever estimate of the power and creativity of the Federal Bank of the US. This is a live stream right now, as you can see, from the headquarters of the Federal Bank, and Jerome Powell is very, very ambitious to make sure that the stock market don't crash another time. But I'm meaning by crash, just to give your perspective as well, by meaning of crash, I mean not a total crash or lower lows. It can go down 10, 20, 30%. And it's not only that I'm thinking that there's a huge it went up and it can go down. You have to understand that stocks don't have a memory, right? They are like a goldfish. They don't know that they were before 50% higher or 70% higher, and it's not like, oh, just because they were at some point they will go there back again. This is absolutely not happening. And therefore think about that every single day when you make the decision to enter the stock market, you want to buy the specific stock or index at the specific time for the specific price, and you are thinking that the price will go higher or lower, depending if you are betting on higher stock prices, or you're shorting the market, which is betting that the stock's going down, which is a little bit more difficult than a normal stock investing. But let's have a look into another graphic right now. So I'm thinking that the current levels are also quite expensive, and this is something that you can see here. If you are looking into the PE ratio, the price per earnings ratio, this is the price per earnings ratio, which shows you how expensive or inexpensive an index or a company is compared to their earnings. And if you can see here, you see that we are at about 18.49 PE ratio for the Dow Jones. A year ago, we were at around 18.58, and those are numbers that are based on the previous earnings or the earnings in the past. So we are expecting everyday new earnings and everyday new earnings PE numbers on those indexes, on those stocks, to see that how the index really is expensive for. So you see here on the right side the estimate. This is the current best guess what people are thinking that the earnings will be, and if the earnings will be more drastically bad, then obviously this PE ratio goes higher if the stock market are standing at the current levels. Now imagine the following. Now we are seeing some earnings that just came in, and they are not so bad, right? So we have earnings that cover January, February, and March. Now we have seen this lockdowns and everything else just started in March, so companies could figure things around, but the Q2 will be an absolute disaster as long as the economy stays in this shutdown, right? And also after, we will not run to the airline industry and buy us a new ticket for the next holidays. The consumer behavior will change, how it always change after such drastical events, and therefore don't underestimate that demand will significantly be lower towards the next quarters. And therefore, if the stock markets just stay on those levels, then we will have a higher PE ratio, and latest then people start, hey, this is a little bit too high for me right now, I'm going out. Or the people will start to see that, and then the PE will be going or standing at those levels while the earnings are lower and the price are going down. So I hope you guys get it. So if the levels stay low, if the stocks stay the same in pricing and the earnings are going to be lower, then the PE ratio is higher, so people say, hey, this is too high for me, I'm selling. So latest then we will see the sales, and if we see falling prices on the stock market and also lower earnings, then maybe the PE ratios will stay the same. Let's have a look also what does it mean for the other indexes that are popular. For example, here S&P 500 or the Russell 2000. Here also you see quite high PE ratios, and the estimates are there as well, but again, those are only estimates. It can be more bad than analysts or specialists thinking on the stock market, and therefore just be always aware of that while you putting your money into stocks. Let's have a look what you guys think so far. Show us the skyline behind you. Yeah, maybe I will do that another day. This would be just be another do-it-yourself home studio reassemble, but I will definitely do that. Then Alonso, I sold my 22 Tesla stocks, some of them at 650 and some at 740, hoping it can go down and get more amount, but now I'm afraid it can only go up, and I will have to buy less than my initial 22. Now, this is typical FOMO, fear of missing out. It's always go up and down, but I believe Tesla has room to go down, but Tesla can also go up for a couple of while depending on the Q1 earnings. And people that are concentrating on some technicals only, totally missing the point right now. Everything is driven by news and information out there, and how the stock market evolve, how the overall economy evolve. This will be crazy. So we shall see how Tesla also will be developed, because think about, if people are not so willing to buy a new car, then also Tesla will be hurt. So we have Ferrari from Italy, and we have also people from Canada, Vancouver, and then Daddy45, do you think people will keep selling off Amazon until EPS Q1? Well, that's a good question. This is a very short-term question, but I think, mid-term, I always think if I buying an option or a stock or a company, I always think like, okay, I cannot predict at all how it will look like for the next months or the second months, but I definitely know in which direction most probably the stock will be in a couple of months. And this is how I make every single trade investment on the stock market, to see, okay, I think that Amazon will be in a couple of months at $3,000. This is my hypothesis on basis that, you know, the e-commerce sector will be super strong, that the advertising will be super strong, and that AWS will be also super strong. That's for I thinking the Amazon stock will go 3,000 or more, and therefore I'm investing into Amazon. If Amazon will be at 2,000 next week, I'm really not caring about that because I know I'm investing for a little bit of a midterm, long term, and this is, you know, this is the best what you can do. Otherwise, you know, I hope you had a strong heart, because these are roller coaster timings right now on the stock market. Let's have a look. So does Amazon continue to run this week? Maybe, maybe not. Who knows? If you had to take an educated guess, do you think the market will be green again next week, or will it downturn start next week? Now, next week it's something happening that is very important from the mechanics of the market. The funds, the big funds, pension funds that are having huge money out there, they have to rebalance, so they have to maybe shift a little bit out of stocks, and therefore maybe the overall will be a little bit downturn, but it can happen also towards the end of the month. So maybe we have still a couple of days time, and it all depends on earnings, guys. Earnings. This will be the most important driver up or down for the stock market in the next couple of days. So another reason why I'm thinking that we have still power to go down for the market is the following graphic. Not this one, but this is a great graphic as well. You know, I'm thinking that this is important to not miss this vlog. As you know, I'm vlogging every single day, and this is a vlog I posted just recently, I think day before yesterday. It also explained nicely why you should not have FOMO over the next couple of days, because there is opportunities every single day on the stock market. Now I want to go with you into this graph. As you can see, we have a little bit of a spike here, and this is showing us the 3.2 million claims. I don't know, when was this graphic from? March 26. So I believe that, you know, this is unprecedented timings. And as you can see, the economy is not doing well. This is the jobless claims. And in addition to comes the small businesses that are all not having businesses at all having, you know, a crash of demand. And you know, in the news, this is something that I love to criticize. In the news, you have always these big companies like Boeing, which other companies out there, Boeing, airlines. You know, these big companies are huge and need money and billions of money from the US government. But what about the small and medium business companies? You know that they are representing 99% of all businesses in the US. And those 99% of small and medium companies are having 65% of all workforce in the US. This is shocking. This is really shocking. If those restaurants around the corner, small companies that support companies like Boeing, for example, then we shall see a really big crisis in this small and medium companies as well. So don't be concentrated only on the big guys. Be also concentrated on the small guys, you know, and therefore I believe also some of this governmental money will need to really go to the small companies as well, and therefore, you know, don't forget that. But as you can see from this chart, it's really unbelievable. The economy is not in good shape, and therefore I think there is still power to go down. And one other graphic that I wanted to show you was this, and I don't know if some of you know, but you know, these rallies that we're currently seeing are totally normal, and you should also enjoy this rallies because they are super nice to trade. And especially what is so beautiful about this markets right now, that people and companies are shifting their behavior, and therefore you will see new stars coming out, like Shopify, like Amazon, like other companies that were really under radar, like Teladoc or Zoom. You know, this kind of new companies will define the future of our next generation of investing, and therefore I'm super excited about the next couple of weeks and months. And let's have a look another look in the live stream, in the live chat. So thoughts on Shopify future? I just said I think Shopify is one of the really heroes out there of this crisis. So what 3 companies have the highest percentage in your portfolio? Also very interesting. I'm very high in cash, but I'm long Amazon right now, and I have another small bets on Beyond Meat. As you might know from my other videos, you know, I love the company. I think the company, you know, after watching also some documentaries and also some research that I really dive into deep, I think that we will have another really important crisis in the food industry, where we have not enough, enough space or enough, physical assets to feed our people around the world. There's billions of people that are hungry for meat, and I tried Beyond Meat, and you know, Beyond Meat is absolutely insane. From the taste, I actually tasted Beyond Meat versus a real burger patty here in Dubai. And guys, I will never eat a real burger again. This was so tasty. And nothing compared to the overall normal burger, but you know, maybe the normal burger was not so tasty. However, you know, but you see how convinced I am by Beyond Meat, how they are affected from the current crisis. This will be a huge question mark. Therefore, always one finger is on the sell button on any stock, guys. I'm sometimes very fast in buying, but I'm not afraid at all to push the sales trigger on any investment that I made if the circumstances are changing. All right, so how about Apple? I think Apple was or is very strong. They have a great product. They have a great culture. I think Apple will survive with all those billions in the bank account. But maybe, you know, we are heading into also some question marks right now to see how it further develop, because Apple, also hugely benefited by this crisis. I think lots and lots of people bought MacBooks and new iPhones, iPads for their home office, and those are still a great tool to work. And you see in Google Trends that I love to use also a spike. People are looking for those Apple streaming services for sure. Benefited from that as well. Therefore I believe that also this is quite interesting. So thank you very much for watching, and I see you obviously, of course, tomorrow. Make sure to like this episode, and thank you very much for watching. Have a nice weekend, and I definitely come back live tomorrow, and also tomorrow with a new Tesla Sunday video, so don't miss that. Thanks.